Welcome to today's 24-hour global financial update. Today's focus: Trump may cut tariffs, global debt worsens, oil prices fall, and tech giants face fines. The Trump administration is considering reducing tariffs on Chinese goods from 145% to 50 to 65%, with exemptions for some auto parts and steel aluminum tariffs. U.S.-Japan trade talks emphasized no specific exchange rate targets, while U.S. Treasury Secretary Basin reiterated the strong dollar policy. However, rising U.S. bond yields suggest investors remain cautious about trade deals. Beyond trade wars, global debt is flashing red. The IMF predicts the global debt-to-GDP ratio will rise to 95.1% this year and reach 99.6% by 2030, surpassing pandemic levels. Nations face rising social spending, interest pressures, and inflation, prompting hedge fund titan Griffin to urge the Trump administration not to damage U.S. debt credibility. In oil markets, OPEC Plus may boost production again. Some members proposed increasing output in June, but Kazakhstan refused to cut output, and Iraq's exports remain steady. If Saudi Arabia pushes for more production, oil prices could drop further. Tech giants Apple and Meta were hit with EU fines. The EU penalized both companies €700 million for violating the Digital Markets Act. While below the maximum penalty, the EU also warned of potential digital ad taxes on US tech firms. Now to the market movements. US stocks rallied, with the Nasdaq surging 2.5% and the China Golden Dragon Index up nearly 3%. Nvidia and Apple rose over 2%, while Tesla soared 5.4%. U.S. bond yields fluctuated, gold fell below 3,300, oil dropped 2%, and the dollar index neared 100. Key events to watch today. This data tomorrow could sway Fed policy. Thursday's U.S. initial jobless claims report may become a key indicator for whether the Fed cuts rates. Thank you for watching today's market news. If our information is helpful to you, please hit the like button and follow for daily global market insights. We'll see you next time.